please do not store all your money in the bank, and here's why. Hey YouTube, welcome back to my channel. So if you are visiting my channel for the first time, my name is Marsh Pillai. I am 29 years of age. I make videos about money related to cars, house, investing, etc. So if these topics interest you, please subscribe. If you're a returning viewer, welcome back. So for today's topic, I'm going to talk about 4 reasons why I think you shouldn't park all your money in the bank. Keyword all. So these are the reasons why I personally don't park all my money in the bank. Again, in this channel, we talk about things and I give you advice only I follow in my personal life. Also, make sure you watch to the very end of the video because I'm going to also talk about 3 alternative solutions that you can do today instead of leaving all your money in the bank. Let's get it. So the number 1 reason why I don't personally leave all my money in the bank is because of inflation. So you've probably heard of the term inflation by now, but if you haven't, inflation in layman's terms is if things cost more than what it normally does. So for example, if your milk costs $3 instead of $2.50, that's because of inflation. If your hamburger from McDonald's costs $5 instead of $4.45, that's because of inflation. If your Starbucks costs $6.50 instead of $5, that's again because of inflation. So how is this related to you storing your money in the bank? Let's talk about that with an example, right? Let's say you have $10,000 and you leave it in the bank for a 2-year period, right? With that $10,000 in today's market value, let's just make some things up. You could buy maybe 10 months of groceries, right? If inflation is 3 to 4% per year, so after 1 year, you'd be able to only buy 9 months of groceries. And by the 2nd year, if the inflation continues the same rate, then you'd be able to buy only 8 months worth of groceries, right? So you see what happens? Basically, inflation decreases your purchasing power, and in return, it decreases the value of your money. Versus, let's say, for example, if you invest that $10,000, right, at a 10% return, which is average return in stock market or real estate, that $10,000 after 2 years would be $12,000. And with that $12,000, you can still get the same 10 months of groceries and some more. So you see how that works? Number 2 on the list is the low interest rates when you leave your money in the bank account, right? Let's say for a savings account, for example, right? So the banks follow something called fractional reserve. You can Google that, but in layman's term, what it essentially means is they only store maybe like 10% of what your account is, and they have the ability or the control to invest the rest 90% to make more money with that money, right? So basically, they make money with your money. They do this through auto loans, home loans, other investments, etc. They pass your money at 4 to 5% interest rate, which is going to be their profit. But in return, what do you get? 0 to 0.5% interest rate as your profit for leaving the money in the bank. So you see how that works? That's modern day robbery in my opinion. So the 3rd reason why I don't personally park all my money in the bank is because of the limitations and the rules that comes with these banks, right? Let's say, for example, for savings account, of course, different banks have different rules, but most of these banks with savings account, you can only withdraw a certain times in a month. After that, they charge you a fee for withdrawing your money. That's crazy, right? And also you need to have a minimum balance. If it goes below that, they charge you a fee. And when you transfer your money between different banks, they charge a fee. If you want to avoid the fee, then you have to wait for 3 to 4 or 5 business days. I mean, you do anything, they got a fee, and I am sick of it. And the 4th item that I have on this list is more of a mentality thing. So accessibility, right? So if you have money in your savings or checking account, it's more accessible. So there's more chances for you to get that money and spend it for unnecessary stuffs. Whereas if the same money is parked in a real estate or a stock account, it's not as easy to liquidate that money and spend it. So financially, it's better. So these are the 4 reasons why I think you shouldn't park all your money in the bank. So again, at the beginning of the video, I said the keyword was all. So what do you have to do, right? That's the next question. So personally for me, I store maybe like 2 to 3 months of emergency fund. When I say emergency fund, that's going to be your monthly burn, your monthly expenses. Whatever that amount is for you, you multiply by 2 or 3 and store that in your checking or savings account. So it's readily available when needed, and you can take the rest of the money out of your savings or checking account and invest, so your money can make money and grow just like how the banks were doing. So now let's get to what can you do instead of leaving all the money in the bank, right? So the first thing that I can tell you guys is to invest in yourself. So investing in yourself basically will help you double or quadruple your money, right? So that can be either you invest in a trade or a skill or a course that you learn that will help you bring more money. So personally for me, I did my school in engineering, but when I graduated, I like numbers and finances and stuff. So I decided to invest in a tool called Hyperion, which is by Oracle. It's a very niche tool. So there's less resources, so they pay more. So that has helped me elevate my career, right? So similar to this, you might be interested in a trade or a skill. So my suggestion is to use that money to invest in yourself, because once you learn it, it may help you to elevate your career quickly. And on top of that, once you learn it, it's for life. You can always use that to make more money. So the second thing that I have on the list today is investing in the stock market. Now, I'm not saying you should take your money from the bank and go buy a bunch of penny stocks, because you might end up losing all the money. Now you have to do your due diligence and analysis before you invest in any of the stocks. If you want to be more conservative, you can do mutual funds or ETFs. If you want to be a little bit aggressive, you can do big blue chip stocks, like big companies that you know is going to stay for long. Personally, for me, I like to invest in big blue chip stocks like Target, Amazon, and stuff like that, right? So where you believe in that the company is going to last for a couple of decades or more, right? That's going to help you get a good return. And on top of that, they also give dividends. Like Target, for example, gives a good dividend. If you do not know, dividends are basically when a company shares a portion of their profit to you every quarter. So the average stock market return is between 7 to 10% for the last 2 decades. So if you look at that, instead of parking your money in the bank, if you leave it in the stock market, that's going to compound and grow and multiply. So the third suggestion that I have for y'all is real estate. So real estate can help you in 3 ways. So the first is the monthly cash flows. If you get the right property at the right deal, you can get paid monthly after meeting your expenses. And the second thing is the property appreciation. So when you look at the history, if you buy a property at $300,000, let's say for example, after 5 to 10 years, it might be worth $400,000. So there's a profit of $100,000 made in a decade, which is sweet, right? And the third thing is the tax write-offs. All properties have depreciation, so you can get a lot of tax benefits because of the depreciation of the property, which you wouldn't have got if you had left the money in the bank. So these are my 3 tips that you can alternatively do instead of leaving all your money in the bank. So this wraps up today's video. I appreciate each and every one of you watching. If you agree with me, disagree, if you think what I'm saying is right, wrong, let me know, comment below. So with that said, I'm out, and I'll see y'all on the next one.